Move over Silicon Valley as Toronto has topped the tech market with new jobs for 2017. We're going to talk about how this is going to affect real estate coming up next. Pow! Michael J. Zach here. Welcome to the channel. If you're new, definitely subscribe for more market news, specifically regarding Toronto. Now, CBRE does their annual surveys on the tech industry, and a big surprise here, Toronto beat out San Francisco Bay Area, Seattle, Washington, DC, and as well New York for fastest tech growing market. Now, we created 28,900 new jobs in 2017, which is up 14% from the year ago. Within a 5-year span, it's up 51%. So this is huge news for Toronto as we're growing faster and faster and faster. Now, what does this mean for real estate? Well, there's always speculation on people saying the market's gonna crash, Now, the problem I see here is when we keep topping these charts for great positive things. And this is, the tech industry, big industry, it's a growing industry, it's not going anywhere. And the fact that we're beating out, like I said, combined, San Francisco, Washington, and Seattle, you combine those, we beat them out. Now, how's it gonna translate to, obviously, with real estate, you got more jobs being created, more money coming in, bigger companies looking at Toronto than they were before because we're hitting these, big charts. It's only going to add value to the real estate. Do I see, what's going to happen because of this? You're definitely going to have interest rates continue to climb because the economy is doing well, money's coming in, interest rates got to go up. But what this means as a whole is at some point you got to get into the market sooner or later because you will get priced out. Because as more and more jobs come and higher paying jobs come, real estate is all about location. Top area is going to keep going up. New emerging markets are going to happen, but they're going to be eaten up, so you got to jump in fast. Now, in the tech talent category, CBRE ranks Toronto number 4. Now, what they did was they analyzed 50 markets, and they analyzed the tech supply, concentration, education, the cost, outlooks for job and rent growth as well for both office and apartment space. Now, number 1, San Francisco Bay Area, we'll bring that up. Number 2, Seattle. 3, you're looking at Washington. And number 4 is Toronto, beating out New York, coming in 5th. Now, in the last 2 years, this is a jump for Toronto from 12th to 4th. Huge, making Toronto the fastest growing tech market in North America. Now, CBRE does believe a lot of markets are over building, anticipating a bunch of stuff happening in their cities. They do not believe Toronto is one of these cities, as many factors play into this, but they're seeing, with new announcements coming from Microsoft last month, bringing, a new core headquarters to Toronto, as well as a microprocessing plant in North York. They continue to see the big names stepping up to the plate, which is going to drive more demand as more money's coming in and more industry is going to open up to Toronto as a headquarters. Now, you might be asking yourself, why are these tech firms looking at Toronto as a place of interest? And it really comes down to best value. And you may ask yourself, best value? What is, everything's so expensive here and all that. Now, they are looking at, when they look at value, they're considering cheaper labor and cheaper real estate. Yes, cheaper real estate. Also, they are looking at the workforce is really well educated, and obviously they can implement their strategies and business plans effectively because we're smart people up here. So the big thing to take out of this is when you compare us to these bigger other markets or tech markets like the Bay Area, New York, Washington, very expensive real estate. Toronto's still very affordable, but it is closing that gap as more and more people keep seeing the opportunity here. and it's something to keep in consideration. Now, they also said in the US, the Midwest has great value as well. So it's something to also that these firms will be looking at as well. Now, looking at this a little more closely, when we analyze a 500 worker firm, they need about 75,000 square feet or 7,000 square meters to operate. Now, how this translates into cost, if you were operating out of the Bay Area, it would cost you around $57.4 million, where in Toronto, it would only be $30.2 million. Now, also Montreal and Ottawa ranked pretty well. Ottawa coming even lower than Toronto at $27.6 million and Ottawa at $32.2 million. With this information, obviously, if you're a seller, you're in a great position. As a buyer trying to break into the Toronto housing market, sooner will better pay off than later. In this case, as we continue to see more and more companies come into Toronto and open themselves up to operating out of Toronto, due to the fact that although our real estate seems expensive to us, when you talk about exchange rates with dollar amount, there is a discount. It's not dollar for dollar, and that's something to keep in mind. So for those looking to get into the market, you definitely want to keep this into consideration, because more and more companies are beginning to look at Toronto as they hit these charts and top these numbers, which at the end of the day is going to drive more and more demand, and with more demand, with low supply, is going to increase prices all around. So definitely keep this in consideration. I want to know your thoughts. Do you feel that this is just maybe a tech boom that's going to bust, or are you riding the wave, jumping in and going to laugh yourself all the way to the bank? Love to hear your thoughts. Like, comment, and share. Definitely subscribe if you haven't, guys, and we'll catch you on the next one. Take care.